Oh my god, guys! I gotta say, what a whack Tuesday. I almost said what Monday, but then I realized that Monday was President's Day, and then this week exploration is on the 25th. So technically speaking, all of the options are actually mispriced on last Friday, which means on last Friday was actually not a good entry point for any call options on the long side. Consider we have Ukrainian and Russian tension and all the other things going on in the world, especially with on. I don't know if you guys follow other countries' interest rate and central bank policy. It seems like the entire Western world is tightening up the monetary policy, and then the Eastern world, including CCP, aka China, and Russia and a lot of other Asian places. Their interest rate policy is fairly interesting. Consider the leverage effect of their deregulation policy is still in effect. Therefore, they cannot tighten up their monetary policy yet. Therefore, you will see some capital actually flying out of the U.S. market, especially with the political uncertainty, into the Chinese market. So for those of you who are interested in me talking a little bit about how do you benefit from that, comment down below, and I might post a video about you can actually make some money out of that. We're not talking about like a huge 20% return, but usually if we're not doing leverage, you can buy some ETFs and probably make around 5 to 10% return on over the next couple of weeks leading up to the interest rate hike. But anyways, the majority of this video we're gonna discuss about oil price. And also, it's just what a whack day today we have on the market. Seriously speaking, we are down by like literally 2.5%, somewhere around like almost reaching 3%. In pre-market, we also had a little slaughter beforehand around like 5 o'clock in the morning because I'm on PST. Therefore, for people in New York, so like 8:30, and then pre-market whenever right after pre-market ends, it shoots up. And it seems like it's going to be a really good day. But then, all the major news outlets are saying a lot of bad stuff about what is really going on in Russia and in Ukraine. But in reality, our boy Putin literally did not add any more troops into critical areas. What he really did is he created two peacekeeping troops into these separatist group regions and sort of like helping them keep their peace. It's really it's a great comparison to what happened years ago with Syria. Same thing happens, and same market reaction, same downturn market reaction, and if we would have predicted that over the weekend, sneaky Mr. Boy Putin is gonna do this, then it's probably a good idea to buy a lot of VIX contracts. Last week we only got one VIX contract, somewhere around like 1 to 2 VIX contract to hedge our position, because our sort of like a medium term and long term outlook on the Nasdaq is we still think the Nasdaq, especially tech stocks, are in a price deadlock because a lot of those stocks are mainly draw down by like 20% to like 30%. A lot of those stocks are down by 50%. By the end of March, we already we're gonna been through like this entire rotation of tech shuffling, and then the reason why for the downfall or for the downturn correction is literally just because of growth slowdown, right? But then when growth slow down, the real value of the company actually doesn't really go down by that much because the cash distribution or the cash flow effect on the company haven't kicked in yet. The real value only will decline when, let's just say, Q3 and Q4, we have some really bad news. But in general, most companies, when they do their earning forecast, especially earning guidelines for the entire year in the first quarter, what they do is they like to understate how much they're going to sell. Therefore, our sort of like a leap year projection and our 6-month projection, especially at the point of when rate hike happens, extending towards the second rate hike, we believe that we're gonna have a very volatile up and down movement, but we don't believe that there's gonna be a flash drawdown of 50% or 20% on the entire market. We think that would be a black swan event. Whoever predicted that, great props for you if that ever happens and make a lot of profit. But in general, we are valuing consistency over a lot of these like flashy plays than before. Therefore, on Patreon, I'll be posting some of those flashy trade ideas, but I won't be actively making those plays on the market. In general, we're still thinking that NASDAQ is going to trade flat, which means 13,000 is going to be the line where it sort of like revolves around. There's going to be a lot of stop loss rate going on around the line of 13,000 and 14. I think referring to my last video, I talked about NASDAQ, referring to all these numbers and my chart on that video, you will see that it's probably gonna move within that range. And you will see a lot of volatile movement within that range. Because for a lot of hedge funds and investors, when a stock is dropped down by 20% to like 30% or even 50%, or in the case of Home Depot, it's probably around like 25% on around this point, it's really hard to make more returns in a short period of time by shorting them more or by beating down their valuation even more, unless everybody's expectation of the entire market keeps being really negative. Okay, this is just gonna be a Monday report on what I think the market will be, and sort of like a quick update on oil, because oil is not really going anywhere consider the perceivable war and everything. So probably we'll see a 97 or 98 dollar per barrel going on, extending towards the the end of next week. And as you know, next week's gonna be really important because March is coming, and usually in the beginning of March there's gonna be a lot of data coming in and a lot of expectations for rate hikes. And strap in and prepare for volatile movements. Okay, for those of you who used to sell puts or keep buying NASDAQ and keep buying S&P and keep buying indexes, that method is not going to work. If you're going to do that, then your portfolio is probably going to start bleeding a lot over time, because if you do the math, an upward increase of 5% is actually less than a downward increase of a 5%. So which means if you buy something increased by 5%, and then somehow the same stock or index or whatever basket of assets you buy decided to decrease by 5%, the gain is majorly offset by the losses, and your losses will be higher than the gains. Because in terms of proportional probability and percentage-wise, a downturn percentage is always basically created not equal to upward percentage, which means the downside is always more ugly than the upside, if that makes sense. If it doesn't, ask that question and I'll answer that hopefully in the comment section, or you're more than welcome to join Discord, and you're more than welcome to join Patreon too. On Patreon, we are, sometimes I will like drop some random bombs there and people just don't understand what is going on and ask me questions, and I'll explain and consider I'm a little busy these days. I still answer them on a timely basis. It's just that it's not like instantaneous, but it's way better than this Discord main chat, because there's so many threads going on in main chat, and sometimes because I have ADHD, so it's like it's all over the place. So it's better. In the Patreon chat, it's easier for me to target, and sometimes based on responses, based on answers, I will make videos cater to basically Patreon audience, especially those who want to learn about intricate mechanics of the market. But again, I am not a financial advisor. I do not give financial advices. Everything we say on this channel is for shits and giggles, and we are as much of a student as you guys are, because nobody can claim that they understand 100% of the market. All right, see you guys on the upside.